Hello everyone, welcome to the channel. Let's do a weekly narrative like how we do on every week. Let's do a weekly narrative for Nifty. So as part of weekly narrative, first thing what we do is we see what is the chart, how is the pattern following. So if we take from the swing, market went up, market did a small retracement and market changed structure here, pulled back to a supply and then drive down to another demand, right? Now it is trying to pull back, but it is slightly in a confusing state. Understand, it is not completely went up to a supply again and then pulled back down, nor it has come down to a demand and then drove up also completely. So what we can see from this week is it was trading inside the previous week's range. If I show you, zoom in this a little bit further, the previous week's range was somewhere, this was a high, right? This was a high of the previous week range and this was the low of this previous week range, right? So as part of this current week, whatever it just finished, we see that the market did not break the previous week's high nor did not break the previous week's low. It traded inside the candle of the previous week itself. Let's go back first to understand whether there was similar kind of scenario in the past where there was an inside candle. So if you see here in this particular scenario, the same to same has happened. This was a previous week high, this was a previous week low, but we can see that there was a small piercing. I'll just yeah, there was a small piercing. So this case is not completely valid. Let's check some other scenario. The reason why I am doing all this is we need to understand that markets tend to follow same to same pattern as that of what it has done previously. So if you see here, we have a classical example of the same kind of scenario. We have this previous week's high and we have this previous week's low. If you see, market in this particular week did not break the previous week's high nor did not break the previous week's low range. It was trading inside this range. So as part of next week, what has happened is market opened gap down and market tried to push up. It did not sustain and ended up closing below this range. This is what can be expected from the market as part of current week also. If market opens below this range, below this current week's range as part of gap down, then we can expect a drive down and then a push up, or a push up and then a drive down. So what would have happened eventually is market opened here, market went up, market came down and market closed here. This was one scenario. Or the other scenario, what would have happened here is market came down and market pushed up all the way and kind of closed here. This was the other kind of scenario what would have happened. So one of these two is what is expected as part of this current week also. We can expect a similar kind of scenario. If market opens gap down, what can happen is market can drive down to this demand and push up to this supply or a swing point or even to the supply and then close as part of inside here or above here or somewhere close to the opening. This is one scenario which can happen. And second scenario what can happen is market can drive the up first and then can come down second and close here. This is what can happen. These are two possible scenarios which can happen as part of this next week. So let's draw a few demands and supplies whichever we have in the chart as of now. So what we can see from a weekly perspective is there is a swing point which is available here. So this is going to be ideally our first target for the upcoming week, meaning 24,477 can be a possible upside target. And we also see that this entire region is a particular supply region, meaning market can, if it wants to give a negative reaction, it can do something like this, give a negative reaction and drive down till here. Okay, so what we see in the bottom ranges, we have a clear demand out here. So these two are going to be our trading range. Now let's go to days perspective and we can narrow down this range a little bit further. So from days perspective, what we can see is this weekly range, whatever we marked here, from a day's perspective is not valid because these candles are all retested by a week. So the ideal scenario, what we have here is this gap. This gap is the one which we are expecting to fill. See, this is how you should narrow down from a weekly perspective all the way to daily perspective, and then from daily perspective also you can narrow down the ranges a little bit further so that your trade can be planned and executed more perfectly. So we can narrow down this range also to here, right? So let's finalize this range and see how we can trade accordingly. So from as of now, Gift Nifty is trading somewhere close to 23,765. Closing is somewhere around 790. So small to small gap up is expected. We see there is a gap available here and there is a gap available above that also. I have marked above both these boxes because both these can be a range which can be used as a targets if we have to drive the market up. Okay, so immediate to immediate scenario from a daily perspective is there is no supplies which are sitting here which are untested. This was earlier a supply, but this was retested. This gap is yet to be filled. On the bottom range, this gap is yet to be filled. Let's go to a smaller time frame, like 4 hours time frame now. So from 4 hours time frame, we can narrow down. We can narrow down this to this particular indecision candle and this to this particular small red candle which we have. And from the same 4 hours perspective, we see these candles are retested. There is no demands at all sitting in 4 hours time frame, nor in 1 hour time frame. Yeah, 1 hour time frame, there is a something small interesting concept which can be observed. There is a small to small gap which is available as part of today's opening, meaning Friday session opening. Market opened the gap up and it kind of rallied, faced rejection from 23,800 range, whichever we mark. We have been saying for this for the past 3-4 days that 23,800 is acting as a strong resistance, right? So imagine this, right? If there is a wall, okay, there is a wall and you are hitting that wall with a hammer. First time you are hitting the wall with a hammer, what happens? There will be small cracks which will be obtained here. This entire region I'm saying as a wall, okay, from this region all the way till this region. First time the market hit it, there was a small crack which was obtained, market came down. Second time market tried to hit it, again a big hole happened, market tried to come down. Third time market hit it. See how the pullbacks are happening. First time when the hit happened, it was drastically down. Second time when the hit happened, it was not that much bigger down. Third time it happens, this entire region becomes weak. This region is nothing but this small gap where sellers are sitting. Okay, buyers are trying to push the market higher, but every time whenever buyers are trying to push it, sellers are stepping in, and there was not even one closure which was obtained above this range. So the moment we get closures above 23,828, right, we can clear see that as part of intraday, we can see a target of 23,928 easily being met. We need proper closures at least till 15 minutes time frame. Even if you go to 15 minutes time frame, you can see that there was not even one proper closure or a one proper follow-up candle which was obtained above this range. So this range is very, very effective when it comes to driving the market up, because the moment market gives a closures above this range, sellers will exit the market and buyers will step in, driving the market even higher. So we can clearly see that market as part of 15 minutes time frame itself can rally up till here because this is a open supply which is available. So the range can be extended all the way till this range. Okay, so what we can plan as a part of immediate setup for Monday is we need proper closures above this, right? If we get proper closures, then we can see a market rally like this. So what are the scenarios in which this can happen? We have to discuss those scenarios also, right? This is a trade plan. Now, how do we execute this trade plan? Let's assume market opens gap up as part of SGX Nifty, which is whichever is it showing at 23,770, 780, 790, somewhere there. If market opens gap up, let it come down. The moment we get positive reactions from here, we can start to enter our trade and we can start to book our profits on this kind of rally. Don't extend the rally all the way till here. Start trailing your profits after 100 points. Once the market reaches 100 points in your chart, start trailing your profits. The moment we get closures above this range, we can add more quantities and we can extend the target all the way till here as part of next targets. Okay, this is for the upward range. What about downward range? If market does not give a positive reaction like this, and if market drives down the supply, then immediately we can see a drive down till here as a first target, 640 as being the first target. Second target will be very bigger because this range I have told you is completely efficient. All the way till here is completely efficient. So the downward range is very bigger compared to the upward range. So that is the reason I'm saying you keep your quantity size extremely low. Okay, because this bigger move can be captured only if your quantity size is low. If you are putting like 1,775 quantities at one stretch, that is the maximum lots which is available for Nifty for one particular order contract, right? If you put that much quantities, if the market moves 30 points itself, you'll start seeing bigger profits. I don't deny that. You'll start seeing 50k profits and your mind will be content with it. So you will start booking it, and the moment you come and see in the chart, it would have made even bigger move, and you would start regretting as to why you did not hold the trade. Although your mind will say like you have made 50k profit, your intuition will say like I wanted to make more, I wanted to enter more. So you will start randomly entering into the chart, randomly buying it without even looking into the chart, and once market reverses, you will start facing losses. Effective to effective trade should have one entry point, one SL point, and one target point. So to summarize the video, above 23,825, I am slightly bullish, and below 23,630, I am slightly bearish. This is how we have to plan our trades and we have to execute our trades. Thank you so much for watching. We'll meet in the next educational video.